So the panel this morning, it's not a panel, the interview this morning is, we're going to focus on blockchain technology, which a lot of you know probably from its connection with Bitcoin. But it's something that particularly over the last year or 2 years, businesses of increasing size are trying to figure out and focusing real resources on how they actually make it work for their own businesses. So a year ago, I moderated, and I might recognize some of you, 2 different panels on Bitcoin. And things have actually changed a lot in the last year. On the one hand, which is a good development, we're focused on blockchain and not just on Bitcoin. And the second thing is that there are a lot of businesses that are actually doing pretty meaningful, at least experiments in this area of the blockchain technology, which was something that was much, much, much less developed a year ago. So I'm joined here on the stage by someone working with one of these big businesses who's actually putting a fair bit of resources behind blockchain technology and working with companies on rolling it out. And it's Peggy Johnson from Microsoft. She's an executive vice president there, where she's responsible for strategic partnerships and transactions. She manages Microsoft's relationship with the venture capital community and oversees strategic investments through the company's corporate venture fund, Microsoft Ventures, which you started, right?
Yes, I did, just after I got to Microsoft.
Which is about 2 years ago.
Yeah, just short of 2 years.
Great. And then Peggy was earlier, she was at Qualcomm, where you spent a big part of your career also as an EVP and member of their executive committee. And you have an electrical engineering degree, which might prove useful in the discussion this morning.
A little useful, maybe.
And my degree is in history, so Peggy's definitely more qualified to talk about this. And she worked as an engineer for GE's military electronics division, which sounds
You're going way back now.
That sounds very cool. I asked her before we came up whether she was the big thing that Microsoft has been involved in is obviously this acquisition of LinkedIn. And Peggy and her colleagues were involved, I think, at a pretty early stage. And then the bankers and the lawyers and everybody else takes over a deal like that.
Correct. Yeah, we're excited about LinkedIn.
So we're going to dive in. We have about an hour for this breakfast, and I've asked that we have a solid 15 minutes or so at the end for questions. It's a topic that can go in a lot of directions, and I'd ask you if you have questions. We're gonna open it up to you. You shouldn't be concerned if the question seems really basic and existential on some level, because this technology is really new, and there are a lot of people who are experts on it who are still figuring it out themselves. So let's dive in.
Let's dive in.
Okay, so we're going to dive in. So the focus today is on blockchain technology, and I want to start by asking, what do you think about when you hear blockchain?
So I would say, as of maybe 3 years ago, I didn't think anything. And as you said,
it's an honest answer.
Yeah, I didn't understand it, and I think still today there's a lot of confusion around what blockchain is. And I guess very simply, it's the protocol that the transfer of Bitcoin utilizes. You can kind of think of it as a protocol layer. And a good way to think about it is Bitcoin is to blockchain what email is to the internet. So if I wanted to send you an email, I will type up the email, and the data will fly over the magic of the internet, and you can open it up. And but the big difference is that's a piece of non-unique data. So I still have a copy of that data, and you have a copy of that data, and you might send that email to 100 other people. And the internet is very good for transfer of non-unique assets. But when we're talking Bitcoin, which is a unique asset, today I think this morning it was worth $650 or so per Bitcoin.
Yeah.
You really want to make sure that when I transfer the asset to you, when I let go of it and you pick it up, that it doesn't get replicated over and over again. And that's really the essence of blockchain. You can send data, and in this case, a piece of asset, a Bitcoin or anything, and that in a trusted manner. And that is the big difference. It's the way that you would send unique types of data.
And so the issue is, when you get to something like currency, is I should not be able to spend the same Bitcoin twice.
Correct.
So I shouldn't be able to spend it with you and simultaneously spend it to someone else. This is a problem that the internet, hadn't resolved before without some third parties, basically, right?
Right. You, like today, with PayPal, for instance, if I want to send you some money via PayPal, they are the trusted intermediary. They have trust in me, they have trust in you, they verified the trust, and we can send money that way. But blockchain allows you to do it without a trusted intermediary. It's a trustless transfer of value. And therein lies the magic, because that opens up a whole plethora of new opportunities to take advantage of that basic fact.
And so that it allows us not to have a third-party intermediary. It's also decentralized too, which means that there's not a bank or someone like PayPal that's required to actually sit in between our transaction.
Correct. And so, without getting too deep in the technical side of it, you can think of it. It has kind of three elements to it. One is that it's a cryptographic. It uses public-private set of keys to make the transfer, and it relies on a cryptographic algorithm. It's distributed, as you said, so all of the transactions are logged on a ledger. And so just like a paper ledger, this is a digital ledger. The ledger itself is distributed over a multitude of computers, everybody who's running the blockchain algorithm. So it's immutable. Once it's in the ledger, it's very hard to hack it, to change it. And as a matter of fact, every time a new block is solved and it's a chain, it relies on the previous blocks that have come before it. So it's all transparent. You can see these transactions. They don't necessarily have my name and your name connected to it, but it's all transparent. It's out there for anybody to see, and the entire history is there. And it's on a multitude of computers. So you can verify the transaction at any point. And that, again, when you think about verified transactions, is where you can open up some interesting new opportunities.
So in a few minutes, we'll come to what that means for businesses and for financial institutions. But just stepping back, how big a deal is blockchain technology? You have people like Mark Andreessen, who was president at created one of the first web browser, and who said that basically blockchain solves some of the basic issues that the internet they sort of never really got around to. With the web, they never really got around to providing, but actually had always intended to, around identity, around security, around these sort of things.
Right. Yeah. So Mark Andreessen's a big fan of blockchain. He's directed a lot of his VC funding toward blockchain. In fact, an interesting fact: just last quarter, there was more blockchain investment than Bitcoin investment. It all kind of started with Bitcoin, but now that's switched. But I think why he's so excited about it is it does enable these new opportunities for a number of businesses. I mean, certainly financial is one. I mean, there's a number of opportunities to streamline financial processes using blockchain. And so if you think about just things like remittances, so here in the U.S., a large number of our immigrant expat population sends money back home. In fact, some of the Central American countries, upwards of 20% of their GDP comes from remittances. And when you think about the cost of those, there's a cost, first of all, there's always a minimum fee to make the transaction. Then there's currency exchange costs. And so by the time the money gets down to their family, there's a good 10, sometimes 20% is taken out. I saw this a little bit myself. Our daughter went to college at Trinity in Ireland, and so we had to send her, monthly, stipend over there. And I was shocked at how much money gets taken, because it goes through so many intermediaries to get there. So I think what excites Mark is you think about streamlining that process. You could make it faster and cheaper. So the settlement time, the other thing is it took days to settle, to get the money actually showing up in the bank account internationally on the other side. It'll be faster and cheaper, and you can put 10 to 20% of that money back into the into the pockets of the people trying to send it to their families.
Yeah.
It's a pretty exciting opportunity, I think.
Well, we're going to talk more about finance. There's one thing you mentioned, that the investments in blockchain technology are greater than investment in Bitcoin.
Right.
People associate the two. You're working with another sort of flavor of blockchain technology called Ethereum. Can you just briefly kind of lay out that landscape?
Right. So the difference between Ethereum and the Bitcoin blockchain is Bitcoin blockchain was tuned for the transfer of currency, and Bitcoin specifically. Ethereum blockchain is a little bit more robust. It actually enables something called smart contracts, which can, there's a few more features in those, so you can actually think about, for instance, a notarized document. You could do something like that, and you could say, you could put restrictions in, like timing restrictions and things like that. That's not able to do that with the Bitcoin blockchain. So the Ethereum is just a little bit more robust. It's not the only one we're working with, but that is one that we've publicly talked about. And there's several others that we're testing in our R3 consortium that we've launched earlier this year with several banking partners.
Can you talk a little bit about that and how big companies are out now actually starting to get into this, how you're working with them?
Right. So so obviously, because this is, maybe first and foremost a financial opportunity, many of the banks are interested. I think there's that disruption. Is this going to disrupt me? I better understand it. But also, I think they see it as a tool to streamline their own processes. Because a lot of the processes that are in place in the banking industry are decades and sometimes, over a century old. And we're in this digitized world now, and they've tried to digitize the processes, but the processes are still there in the background. And so it's a very awkward and costly and time-consuming process right now. So they're interested in it. And we gathered ourselves and several of the banking industry, I think there's upwards of 43 or 4 banks now involved, together in a consortium in New York called R3. And it's an opportunity for us as a technical partner and the banks to experiment with blockchain. And we actually look at several different blockchains, but we started with Ethereum. And they can look at things like, can I take out just one process, like the letter of credit process? That's a very cumbersome process. When you're working with, someone on the other side of the world and you're trying to do an exchange of goods and send them money, a lot of times you go through a letter of credit. And so that's one of the initial processes that they're looking at. And I think what you'll see is as we experiment, we'll try things out, and then probably within a year or so, they'll be running them in parallel with the existing process, and then maybe in another year or two, they can drop the traditional process. But clearly, because there's a lot of trust in banks, they can't flip a switch overnight. This thing needs to be wrung out pretty well. So it's sort of an opportunity to, in a lab environment, test out some of these processes.
And the advantages for them are speed and cost, presumably?
Yeah, because even, if they can get rid of some of the traditional ways of processing these transactions, then they can reduce the cost. And blockchain takes a lot of that out for them. They can, in a trusted manner, rely on blockchain for portions of the process. And so, as I said, they're not going to flip a switch and everything will go overnight, but they'll test out some of these things: remittances, letters of credit, checks, things like that. I think can be much easier on all of us if we had a reliance on blockchain.
And so, but for financial institutions, there are a few parts of this that probably give them some trepidation. So they're regulated institutions. The blockchain, as you said, is a public ledger, and the security and scale of this has been tested, but not in terms of the scale of our global banking system, probably. And
Right.
how do they think about those three? So regulatory, scale, and scale, I guess, and security, and then also just the public nature of the blockchain.
I would say all of those are being tested within R3, and so we're doing things like interbank transfer, bank-to-consumer transfer, and so we're using it as a testing ground so that they can wring out some of those things. But clearly, yeah, they want to understand it better. I think they are already a trusted institution, so just to extend that to some of these processes is one of their goals for sure. But we're early days. I mean, we're not there where where we can actually jump and delete some of the processes. But they were super interested because it'll help streamline their own businesses, and I think they recognize that.
I think one thing that requires a bit of a leap of conception is this idea that you have the blockchain that's running in a decentralized fashion. So basically, the record of the transactions exists on computers of people all over the world. Some of, historically with Bitcoin has been involved in illegal drug trade and human trafficking and all sorts of horrible stuff. And so the sort of leap of concept, I think that's probably has to be important for these financial institutions and a company like Microsoft to think about this is how do you trust regulated financial transactions or business-sensitive processes to a ledger that exists in decentralized fashion on people's computers? You don't even know where the computers are.
Right, and if you think about it, the ledger is just logging the transaction. So it's proof that a transaction has occurred. And I think as we continue to work on some of these use cases, people the trust from the public in the blockchain will grow. I will say it was tainted a bit from early days, for sure. When Bitcoin was associated with Silk Road, and sometimes with terrorist activities. But if you look back, the same thing kind of happened with the internet too. When it first came out, people will embrace these new technologies for good and not so good things. But I guess that's going to happen. Silk Road's shut down now, yeah. So the right thing happened at the end of the day. But there is a trust factor, even though we call it a trustless system. The public has to embrace that trust. It's much like ATMs. When ATMs first came out, people said, I don't know if I'm going to use that machine. I'm going to keep going to the teller, And so there's that factor to it for sure. But a lot of it's about just education. The more people see what it can do and the good it can do, I think the more they'll embrace it. So, for instance, in many countries, title of land can be disputed. You can have a farmer in Guatemala who's been, farming the same land for decades and decades. And I just picked Guatemala. It could be any country where you maybe have a leader who isn't respectful of land rights. And all of a sudden they can come and say, well, actually, that's my land. Sorry about that. And how does the farmer prove it? What do they do? They have no recourse. But if the land title was logged in the blockchain, and you could go back and say, no, right here, it says, this is my land, then how good is that? You have someone who's been able to verify their ownership of land. And oh, by the way, if they want to sell that land, they can log that transaction. And then that's verified. And so there's so much good that can come out of it. I think another area is this whole idea of identity. There's 2 billion people in the world who don't have any identity. They don't have any official government identity, and they don't for a number of reasons. Some of them, it's too far to get to the government office to get their government ID cards. It's largely disproportionately women who don't have identity. Sometimes in some countries, you need a man's signature to get identity if you're a woman. So blockchain could be your identity because what many of those 2 billion people have is a cell phone. Yeah, I always say it's water, shelter, food, and a cell phone, and not necessarily in that priority. Yeah. Many people will
forego water for their
one of those 3 things for their cell phone. So if you have a cell phone and you can show an ID with that, how great is that? Then people who are unidentified can become identified. They can get bank accounts. They can become part of the banked community instead of the unbanked community. They can start their own businesses. And so there's a huge amount of good, and we have to educate people on that rather than focusing on what happened with Silk Road and the transfer of money on that.
Yeah, so there are 2 things you just mentioned. So one is it's decentralized. And so if you're in you have title to your land and the government tries to seize it from you, they actually can't shut down the record of your ownership if
It's
it's
there.
on the blockchain.
It's transparent. Yeah,
Yeah.
everybody can see it. It's right there.
And which is really important. And then the second thing is this question of financial inclusion, which is, my sense of it, is actually a fairly big part of the discussion around blockchain technology and how there are people who don't actually have access to the world, to the economy, basically.
Right.
And providing them an identity, a way to make secure transactions that are not dependent on a third party, that might not give a loan to a woman or give them what they need to actually run a business.
Right, and if you just think in our society, each of us have a government ID, and at one point we opened a bank account, and we put money in there, we built up credit. At some point, credit card company said, I know who you are, and I'm gonna give you a credit card. And then at some point, PayPal came along and they said, oh, you have a credit card, you have a bank account, I know who you are, I'm gonna let you buy things on the internet. And so we get there eventually. That kind of isn't available for many people around the world. And oh, by the way, that system that I just described to you has several points of failure, because these companies, these trusted intermediaries, have a database of our data, right? And it's sitting somewhere. We hope it's secure. They tell us it is. We believe in them until there's a hack, right? And then now it's like, oh, who's got my data today? Any one of those points along the way, that database or that we have trusted with our personal information can be hacked. And so that causes us to say, well, is there a better way to do this? And I think blockchain could be that way, to have a trustless, without an intermediary who might be hacked. Now, there's some that are better than others, right? I trust PayPal because I make a lot of transactions over PayPal. But there's that opportunity. And so if we can take that away, not only for ourselves, but for the emerging markets who don't even have the ability to be banked in many, many places with blockchain, I think it's a good thing. And that's, again, what the focus should be on.
So there are some interesting experiments in very direct commerce using the blockchain, and one of them is OpenBazaar.
Yeah.
Do you want to talk about that?
Yeah. It's interesting. It's a new startup, I think, but I can't recall. I think Andreessen is in it. It's called OpenBazaar, and basically, with the blockchain, it enables kind of an eBay-less transfer of goods and value. And because as I just walked you through, if I have something I want to sell and I put it up on eBay, we both have a trust in eBay. eBay has a trust in us. I can sell to you and you can get the product. If you are making baskets in Africa and you want to sell those, maybe outside of your village, OpenBazaar is kind of an interesting way to do it. Now, if you go to it today, it's an early UI. it's not.
It's kind of an ugly.
Site, yeah. I don't know if you've played around with it. There's about 300 vendors on there, and there's interesting products on there. But you can imagine a world where this basket maker in Africa wants to sell these, and sitting here in my home in Seattle, I can say, oh, this is an interesting basket, I'm going to buy it. And using the blockchain, it facilitates that, and using Bitcoin as the currency, it facilitates a sale of that. And I mean, can you imagine how you would do that if you didn't have that? You have to go through a broker who then brings it over and goes to Pier 1 and tries to sell it to them and get it in the stores. That's sort of the process now. It would just be unthinkable that I could directly buy a basket from a basket maker in Africa. And so OpenBazaar, early stages, but that they are a company that is enabling that sort of a transaction.
How would you assess the ease of consumer use of something like that? So you're doing a transaction in Bitcoin.
You'd want to do it in Bitcoin, right? Because you have different currencies on either side.
So what is your assessment of the state of the consumer infrastructure? How easy it is for
early days?
Yeah, okay.
For sure, early days. There's an interesting company called 21 that's looking at enabling these micro transactions. And actually, my previous company is putting in their software into their chips, Qualcomm is, and it'll enable this ability to have a microtransaction in your phone for people who maybe don't have Bitcoin already. Mm-hmm. It also, while it enables you to make a microtransaction, it also allows you to mine Bitcoin in the background, because you have a pretty powerful computer in your hand with a mobile phone, and so it's kind of doing double duty, and it allows you to accumulate some currency and then use that currency to make purchases.
And what you're talking about is to mine Bitcoin. Basically, you use your computer's processing power to run some mathematical problems, and if you
solve the problem, then you get a Bitcoin.
Then you get a Bitcoin.
Yeah, a certain amount of Bitcoin. Yeah. So that goes back to the how it becomes a trusted protocol. Again, without getting too deep into the technology of it, every block is there on Bitcoin right now. A block of transactions is solved for about every 10 minutes, and the miners all work in the background to try and solve that. And once it's solved and attached to the Bitcoin, whoever solved it is awarded the currency of Bitcoin.
Yeah. So you mentioned eBay, and there are some companies. So there's eBay, there's Airbnb, there's Uber. There are a lot of companies that are effectively these third-party intermediaries between individuals pursuing a transaction together. So in the case of eBay, it's you're selling a good, and I'm the buyer of the good. With Uber, I'm the taxi driver, and you're my passenger. With Airbnb, one of us has a home to rent, or a room in our home to rent, and so there is some scenario where people are saying, like, why, if the blockchain technology can actually connect us around a transaction, and can authenticate us where we have trust that when I contract with you to rent your spare room when I'm visiting Seattle, that the transaction, we don't actually need Airbnb. And for a taxi driver, they don't necessarily need Uber to engage in these transactions, because that third party, this is the sort of
trusted third party,
the theory or the utopian scenario is that the third party, which is Uber, Airbnb, eBay, isn't actually necessary.
Right. So there is some discussion of that, and I think that discussion is really ramped up with this idea of smart contracts, which things like the Ethereum platform enable. Because you could imagine, and as you said, you're in your utopian society, that, okay, I want a car, and where blockchain enables a peer-to-peer transaction, I could just say, using a smart contract, put a flag up that says, I want a car, I'm standing outside the St. Regis, and you as a driver could see that flag and drive over and pick me up. But there's a lot of road in between this world today and that world that I just described. First of all, Uber is a very trusted third party. They've got a fantastic interface, right? I mean, it just works wonderfully. So you would have to convince the consumer to let go of that and go to this other trustless peer-to-peer network. They do a lot of vetting of the drivers. I would be able to have a rating, and I could see how well you're doing with the smart contract. So that'd give me some comfort that you might be able to drive. But I think I'm assuming a lot there.
I'm a great driver.
I'm assuming a lot.
Trust me.
It's trustless. It's a trustless system. But then, there's things like, well, what if I didn't like the ride? Uber has a process. If something happens on your Uber ride, there is a process. There's a way that you can either get your money back, or there's a way to complain. What is that in this scenario? Yeah. Let's say I got mad and I don't want to pay you. What the smart contract does enable is the value transfer sits in kind of an escrow type place until the other side believes the value has been transferred, and then it's released. But if there's a dispute right now with a smart contract, the idea is it would go to a third party to resolve that dispute. So that would have to be in place. I mean, it's already in place with Uber. All of that would have to be in place. It's not to say we won't get there someday,
Yeah.
but it's just a little utopian right now. Taxes, who's going to pay the tax? You, the driver, who's paying
Yeah.
the tax? The government will want to know
And
that.
in what currency? Right?
And in what currency, yeah. So there's a lot of gotchas along the way, but, you can see way out, there
Just
might be somewhere.
listening to you describe this scenario, it sounds a lot like the internet in the early 1990s, where the interfaces are ugly, and a lot of the basic infrastructure that we take for granted just doesn't really exist on the platform. Is that a fair analogy?
I think that's a very fair analogy. You've also heard people say, as far as technical paradigm shifts go, we've had some interesting ones, starting with the internet. I think mobile was another huge paradigm shift for all of us. Cloud computing, being able to access your data wherever you are, anytime, it's another huge paradigm shift. Blockchain is another huge paradigm shift. And we're early days. We don't have it all figured out. A lot of people are testing out various scenarios. Some, like maybe the financial one, will pop up earliest. But there's a whole plethora of things that you can do with it. And this is why, as Microsoft, we're interested. We see this, the interest in it, we see the opportunity with it, and we thought, well, how do we play in that game? And so we came up with this idea of blockchain as a service. So we have a lot of people who want to implement blockchain for some kind of transfer of value. They don't want to start from scratch. So coming out of our R3 engagement, we actually just last week, we announced something called Project Bletchley, which I'll explain why we have that name. But it's basically middleware that developers can use to write their own blockchain applications. So it's a secure layer. It has APIs into it. They don't have to start from scratch. We'll also have our Azure is our cloud at Microsoft, so we have something called the Azure Marketplace. So tested pieces of code will be up in the Azure Marketplace. So if you're starting from scratch and you want to maybe replace your title company that you have, you want to start using a blockchain service, you can go in there and pick up tested pieces of code. And then the third thing we do is something called cryptlets, which is it's off the chain code, but it can set some of those triggers that I was talking about. There might be a timing trigger. Oh, I've just left your Airbnb house. I'm happy. Flag goes up. You can release the money out of escrow. So it's sort of augmenting the blockchain capability. So we just released all of that last week and said, to the developer community. And I think that's where the magic really starts, because they can pick that up. There'll be stops and starts. There'll be things they check in and out of the Azure Marketplace. And I think we'll see some exciting things.
And so it's like the analogy to the internet. The business for Microsoft it's a decentralized system with a protocol that Microsoft is not responsible for. But in fact, your business is around providing support for businesses, basically, who want to develop applications on the blockchain.
Right. And so our earliest support right now is focused on the financial institutions in the form of the R3 consortium. So we're looking at things that are tuned just for that segment of the market. So do they need specific APIs? Do they need to make a transfer in a certain amount of time? So whatever is specific to them, that's what we're testing out inside of R3. So you'll see us building capability for certain verticals like that initially with the financial institutions.
So can you instruct us on the correct use of the Microsoft terminology? So I'm using Bletchley to do some cryptlets with my D apps. Is that did I get it right?
Very good. You're hired.
Okay, excellent.
So Bletchley Park is the area in the UK where U.S. and British, it was kind of this ragtag team of U.S. and British during World War II got together to try and solve the Enigma code. And they did, which the Germans were using for their communications. And there's a great book on it, but there's just all sorts of funny stories. I think there might even be a movie coming out on it as well, where they then spoofed the Germans, and they didn't know that they were able to read all the communications. It was all done in Bletchley Park. So we thought we chose Bletchley because the team who worked on blockchain as a service was part from the US and part from our London office.
Okay, excellent. So I want to talk, just to actually underscore the analogy. So the way you're, with the internet, basically the reason that a lot of people are excited about the blockchain now is they're seeing a parallel to the internet in the early 1990s.
Right.
Basically, that's the bet of Microsoft.
Opportunity.
That's the bet of everybody. And there's opportunities both for businesses like banks to use it the way they use the internet for various things, and their business and investing opportunities to create the Google and Uber and whatever eBay, the infrastructure that exists around this technology.
Exactly, and so that's what we're focused on. We know that there's a lot of opportunity in this area. We know there's a lot of interest in this area. We see the activity in the VC space. It's really ramping up, and so we wanted to help enable that. We have a good set of tools in place already. We have a trusted cloud in place. We have access to enterprises all over the world who are our customers. So it felt like a natural entry point for us to offer blockchain as a service.
So you've mentioned a few of them, but are there any startups or companies who stand a shot of being the next, the eBay of this era, or just companies who are doing interesting things around the blockchain?
Yeah, so I talked about OpenBazaar. I think that's definitely one that's interesting. Another one that's interesting is a company we've been working with called PocketDoc, and they're using the blockchain to speed the settlement of healthcare, of getting the healthcare providers their money quickly, which is like the settlement. If you've ever looked at that, it's a labyrinth of one to the next, and then they finally get it. And so they're looking at taking out a lot of the layers in between using blockchain and the trusted protocol there to get the payment to the healthcare provider in a much quicker fashion. And that's been a lot of fun to watch because it was just not something that had occurred to us. And again, the developer community is an amazing thing, and they came to us and said, here's our idea. And we started working together. They were one of our first companies that we worked with our blockchain as a service. So we're looking forward. I'm sure there'll be many more in the healthcare space, but you can imagine that same sort of thing. Wherever you want to, you have a transaction, you want it to go faster, you want it to be less expensive, and you want it to be secure. You can look at blockchain as a possible way to enable that transaction.
Yeah, that's a great example. Are there other in the sort of landscape of services that need to be built up around the blockchain? Are there other just obvious sort of fields of opportunity?
Notaries is one. My husband and I just had to get something notarized the other day, and it's always a little bit of a pain, like, okay, when do you get home from work? Okay, well, are you going to be there? We both had to be there.
Yeah.
And you can imagine that would be something that if we could take out sort of the friction of that, that would be one area for certain. I think, just title, that's another one, that when you buy a house, that's always kind of a little bit of a hassle. You got that big stack of papers you have to sign. You're never sure quite what you're signing.
Yeah.
And, somewhere in there you're getting title to the house. I think we can streamline a lot of that. So, will it disrupt some businesses? I think it'll streamline some businesses. I think you still need sort of the human touch in there. But for sure, there's opportunities in some of these very traditional, very paper-laden things that we still do today that it can enable.
So we're going to, in just a few minutes, we'll take any questions that you have. So hang on there for 5 minutes, and then we'll get to you. Before we do get there, I wanted to just briefly talk about something that's in the news right now. And isn't interesting, we've talked about finance, but just the idea of the corporation and a business in general. There's this pretty radical experiment going on called the DAO.
Right.
And basically the idea behind it is that you have people who, there's no CEO, there's no employees, there's no real company, but basically you have people who use the Ethereum blockchain to have ownership in this company. They've invested in it, and also to vote on what the company does. And it's basically like a VC fund where there are projects, and then everyone who is part of this company votes if you have ownership in it, you vote on what the company does next. So
That's a great summary of it.
Okay,
That's
well-
really good. Yeah, so it seems crazy,
sounds
but
amazing,
a
right?
CEO-less, employee-less company, and so like, why would you have that, right? It seems a little crazy, but this idea of blockchain can enable that. And the first one, which is just called the DAO, DAO for Distributed Autonomous Organization, was launched just a few weeks back to much fanfare. Now it's not a problem of Ethereum. It was built on the Ethereum protocol, but there's the software built on top of it was meant to act, like you said, like a VC, and people from around the world, I think it got up to about $130 million it was funded at, put their trust in it and said, okay, I'm going to join this fund. And the fund then looks for other opportunities to fund in that space. And you basically, how it chooses what to fund is the number of shares pro rata that you have put in is the number of votes you get. And it just runs on this smart contract with a little problem that it ran into.
Which is why it's in the news
that's
again.
why it's in the news.
Yeah.
So they had an issue. There was a vulnerability in the software. And again, this was in the DAO software, not the Ethereum platform underneath. But there was a vulnerability that allowed one of the members to leak out some of the money, and over time he got millions and millions of dollars, tens of millions of dollars, and now they're like, oh, okay, what do we do? And it was an interesting week of black hat versus white hat, if you will. It kind of went back and forth of what was going to happen and how are they going to stop it. So what happened is sort of the white hats involved, the good guys involved in the DAO, figured out quickly using the same vulnerability that they would try and balance that, and that was put into place. But then they had to figure out, what do we do from here? Because actually there's no CEO to go to and say, what do we do from here, CEO? What next? And so there's just been an amazing, you got to go back a week or so and just read through it, but it's been an amazing back and forth. And really the whole principle is that the blockchain is immutable. You don't change it. It is what it is. Now, one way to fix this and get those tens of millions back is to do a hard fork, basically, to hack it, and to do what you're not intended to do.
And that means basically just rolling back the ledger and saying the tens of $millions that were
this
sold
didn't happen. We're going to go back
sold,
to here.
Actually,
And that's one thing. The other thing is do nothing. That's actually an option, because the principle is you don't change the blockchain ledger. And everybody would have to agree on it anyway, but so that's another one. Up until last night, they had a middle one, a soft fork that they were going to do. That seemed like everyone was sort of rallying around it. Again, the members have to vote on it, and then all say, let's do it. But they found a vulnerability in that last night. So now their options are hard fork or just leave it the way it is. And so it's still playing out. There's a lot of drama in that community right now, but it's been fascinating to watch. And again, early days, okay, something happened. It doesn't mean it's the end of DAOs. I think we will see these again and again.
And it's a really interesting, you can sort of step back from it and think like, what is a company? A company is decision making, and it's contracts basically with its employees and its partners. And the DAO is worth looking at, I think, just as sort of abstracting the company to that level.
It is, and I think you see companies involved with the Ethereum blockchain, because it enables these kind of smart contracts, thinking about how they actually utilize this in existing companies. And so you could imagine where you say, okay, I need a piece of code to be written. I'm just going to put a smart contract in place, and anybody in the company can decide that they want to engage and be the developer of that or not. And so it's really a distributed type of company. Even within a company, you can enable this kind of autonomous interaction between employees. And so it lessens the role of a central figure such as a CEO.
Yeah. Well, and it has implications for regulation. If you have the
Absolutely, right.
blockchain ledger where all of your transactions are encoded, you can turn them over to a regulator. And investors too, because if your finances are real-time encoded, you could, in theory, distribute dividends on a rolling basis. We're going to go to questions.
Okay.
We could talk about the DAO for a while because it's a really interesting drama. And some of the critics of blockchain are saying this idea that you'd actually even consider rolling back the ledger is a
Heresy.
for,
Some people
for a
feel it,
financial
yeah.
institution
Yeah.
or a regulator or anybody is like
Yeah.
proof of the incompatibility of the blockchain with their fundamental activities.
Right. So a lot of debate going on right now, and it's great, good, healthy debate, and they're areas we're going to have to work through. But pushing on, I think we'll see resolution. We're definitely going to see something here with the DAO. It's going to go one way or the other, and there'll be learnings, and those will be incorporated into the next DAO. And so it's not. It's by no means should we stop. I think we need to keep pushing forward. There's just too much promise with this technology to stop now with a hiccup.
Okay, we're going to go to questions now. Do we have microphones, or we do? Okay, so we have two. We'll go between the two sides. If I can ask you to stand up with your question and say your name, and if you have an organization that you're associated with, that would be great. Maybe we start over on the left side, actually right behind. Yep.
Hi, my name's Kate, and I'm like not advanced in like what you're doing and everything. So I just want to apply what you're saying to like somebody who's at home, and we have a daughter who's going to school in St. Andrews, and it's
Yeah.
outrageous. So
It is.
I want to do it from my home, my computer. What do I do? What's the first step, and then where do I go from there?
So there are companies who have built Bitcoin wallets, and Coinbase is one of them. So you can download their software, and on the other side, your daughter can have that software, and you can transfer money that way through the Coinbase wallet. There's a small fee, nothing like the fee that you're probably paying right now, but it's a fraction of what you're paying. But then she'll have Bitcoin on the other side, and then you have to transfer that into her local currency. But that, we're just seeing early days of that. There are some companies I know that are working cross-border. So I'm originally from San Diego. There's a lot of remittances that cross that border every day, and there's some companies getting into that space, which actually is a big threat to some of the things that Western Union is doing in place that's been in there for years and years. So these things are going to be very, very disruptive, but that is one way.
And you are seeing other organizations that a lot of people have accounts with, like PayPal and Venmo, who've said that they are going to support Bitcoin. It's not there yet, but they've signaled that it is coming on a consumer level. So you may have to. Coinbase, I think, is one of the places to go today, but it's not truly seamless and easy, right?
It's not. I mean, it's better. There is a lot of activity in the wallet space itself. A lot of it's about the UI, and I talked about Uber. I mean, the experience with Uber and Airbnb is so good, and when you have to manipulate too much, you lose interest from people. So we've got to get it to the point where it's very easy to use and it's simple, and we'll get there. I'd say we're still early on that.
We'll take a question over here. Microphone. Actually, we'll start back there. Yeah.
My name's Todd Martin. Question is about credit card companies. Is this going to disrupt the credit card industry?
So credit card companies are trusted intermediaries today, but they are trusted. So they are today have a lot of our trust. They're all interested themselves. Not only PayPal, MasterCard, Visa. You'll see all of them, looking at this space. I think to go all the way and say it, does it take them out? That's probably a bridge too far. I do think it can help their own internal costs as they verify who I am and who you are, and then allow the transfer in between through the bank in the middle. It'll help them take out some of their costs, which is why they're so interested in it and involved and engaged. So literally everybody in the financial space has at least some time and attention and resource focused on it right now, and I think that's what you'll see initially.
Let's go over this side, actually. Do we have other questions over here? Maybe in the back? There. Yep. And you can, with the microphones, you can find the next person, and then we'll just Go ahead. Thank you.
Frank Maleb. How could I set up my own bank account without a bank using blockchain?
It's still a little difficult today. So your bank account has, I assume, U.S. dollars in it. As I mentioned, the Coinbase wallet, if you download that, you can transfer U.S. dollars into Bitcoin using the Coinbase wallet. So you can set that up and then have Bitcoin. There's actually quite a few vendors now who take Bitcoin. Microsoft's one of them. If you buy Xbox games, you can actually use Bitcoin to pay for things. There's a number of other vendors. That community is still growing, so there's still, you can't buy everything using Bitcoin. But more and more you hear companies saying they take Bitcoin. Several of the presidential candidates take Bitcoin in donations. Rand Paul was the first one. So it's still a little cumbersome, but you can get there.
Okay, great. Who has the microphone? Yep, thank you.
Is this on?
Yep, there
Yeah.
it is.
My name is Bob Taylor. I'm a lawyer from San Francisco, and I'm curious about the security aspects of this. You mentioned this with Bitcoin particularly, the fact that these ledgers are distributed. Does that mean that you have in multiple computers an identical copy of the ledger?
Yes.
And so if somebody tampers with one of those copies, is the system set so that it will
Yes.
identify that tampering?
Oh, basically, if you try and tamper with it, every 10 minutes the system is again verifying the previous block as it adds the new block. And so a single rogue computer trying to do that would be unable to do that. There is this idea that if you get enough of the miners who are verifying, all saying something is different, like trying to change the history of it, that you could actually have a case of fraud. But the issue there is the amount of compute power that you need is like outweighs that, and so it's a very, very secure system, and one that so far has been immutable, and we haven't seen any of that. The seams in the current system that, like the PayPal or the credit card system, is where you see fraudulent activity. Is when you're handing ownership to the next one. That seam, that's where you see a lot of fraudulent activity, and that's where blockchain would take a lot of that out because it takes out a lot of that friction in between.
Generated, the problems that the miners are having to solve, are those generated by the blockchain?
Right, so every 10 minutes, all of these miners are looking to solve the hash that then gets appended to the previous blockchain, and it becomes part of it. And so that's why you can't just go back 2 years and try and change something there, because every 10 minutes it's going to be verified again through this consensus of miners.
So the math problem is effectively generated by the activity itself.
Correct.
That they're solving.
Yeah.
And in terms of the decentralized computers, it's effectively a vote of each of those computers that this is a non-corrupted version of the ledger. And as Peggy was saying, there are scenarios where people say, well, maybe China could just get the majority of those computers, or bad actor in China,
Yeah.
get the majority of those computers and have a majority vote and say, actually, the ledger is this, in a corrupted fashion. But as Peggy said, just the amount of computing power that would be required to do that would be more expensive than any financial gain that you could get out of such a heist, basically.
Right. No, that was very well put.
Okay. Sorry.
Yeah.
Over here, we have the...
Hi, my name's Susan, and you've done an outstanding job of explaining this in a really clear, concise manner, so thank you. But my question is tied to what you're discussing right now. That earlier you mentioned miners work to solve a transaction, and then they get a piece of the blockchain.
They get a piece of Bitcoin.
Of the Bitcoin,
Yeah.
okay. Who are the miners?
Who are the miners?
Can you explain that a little bit?
Yeah, so the miners are running the protocol on their computer. Today in the Bitcoin environment, they're largely in China. And the reason for that are many, but the electricity is cheaper there. They have been able to, just through the number of people involved, it's a large amount of compute power. So you'll see that much of the mining is done in China today for Bitcoin. So then some of these others are, Ethereum and others. There's Ripple. There's a number of other blockchain protocols, and those are spaced out in all sorts of different areas. But for Bitcoin, they're largely in China.
Do you have the microphone is back there? Sorry.
Oh,
Jeff Stiefler.
Okay. Yeah. We'll go here and then over there. Sorry. Go ahead.
Peggy, you've talked about how blockchain can be used by companies to reduce their costs. There have to be companies and industries, though, that will be significantly threatened by the disintermediation potential of blockchain. If you look at those industries and companies, which do you think will be the most threatened? And if you were the CEO, what would you do to manage that threat?
So I'm an engineer, and when I think about technology, I think, if I'm a CEO and I see this coming at me, you can't stop the pace of it. You need to understand it, to educate yourself, and I think of it as creative destruction. So I might have a paper-based system that's going to get disrupted by this, but I have to think, okay, if that happens, if that takes out a portion of a process that I charge a fee for, is there something else in this space that I can do to get ahead of that? Maybe I can create the best UI around this to run it on the blockchain. UIs are difficult. That is what keeps a lot of technologies from ever seeing the light of day. It has to be easy for all of us. Maybe that's what, as the CEO of a company that's getting ready to get disrupted, I might focus on. So for sure, there will be disruption. That's what technology does, but it breeds opportunity as well.
And I think we're early enough too. I mean, you could, if you take the internet and the 90s analogy, it took Amazon a long time to basically become the retailer
Absolutely.
that we all use.
Rely
And
on,
there are
yeah.
lots of missed opportunities for other retailers along the way
Right.
that would have changed history, basically.
Ignoring the pace is never a good thing, I think. You really have to keep up with it. You have to educate yourself. You have to understand it. And this is a difficult area to understand. It's complex. There's a lot of facets to it. And I think that's what, companies are just waking up to the fact, I better understand this because it could affect my business.
We have time for one or two more questions. There's a microphone over here. Yeah.
Great. Nana Adai. Question about transparency. So transparency of the transaction seems to be core as they're listed
Right.
in these ledgers around the blockchain. What about transparency of user? Because I can see where if I'm doing a transaction with you in settling something, it's fine. I understand it's you and I. But when you go into that DAO situation where there's someone who says, I'm just going to siphon off money, does the rest of the community say, I actually want to know who that guy is? Do they care about that? Or they're just more concerned about the integrity of the protocol and how
They
not
actually
to
don't
have
know
that?
who that guy is, and maybe it's a woman.
Or, yeah, a woman, sorry.
So, because it's anonymous, but it's transparent. So it doesn't list your name and my name and the fact that transaction has taken place. But you make a good point about transparency, because banks are saying, if a big transaction happens, you can, through the ledger, maybe see regions or even IP addresses of where one transaction went to another. And there is a sense of some of that we might not want to be out in the open. So you have some banks thinking about side chains or running their own blockchain, which are secure, but maybe not as secure as when you have millions of people mining like you do with the Bitcoin chain. But you have this transparency issue. You might want to know that a block of 10 million has gone from here to there. That might signal something. And so there is a debate going on there about whether you use the existing blockchain or you use your own blockchain or a side chain. And so there's a lot of debate in that area as well.
And that would be like a corporate intranet, which is sort of walled off from the internet and operated.
That would be an example,
and
yeah. So
operated
we've got a
separately.
corporate.
You could have your own blockchain.
You could have your own blockchain.
But there are drawbacks.
But there's
to
drawbacks to that, right? Yeah, it wouldn't be as robust as having, that same blockchain spread across all of those numbers of computers. Much harder to change history when you're in that situation.
Okay,
Okay,
I'm
I
sorry,
think
we're
we're
out
good.
of time. There are a lot of questions. We promised to lobby for a blockchain panel next year, and hopefully there'll be more consumer services that are available. There'll be a bank where you can easily store your money on the blockchain, and big businesses that we're interacting with will have made a lot of progress on this question. So thank you to Peggy from Microsoft for this discussion.